Albert Einstein once said that compounding is the eighth wonder of the world. If you understand compounding, it truly could change your life. It has often been described as the millionaire maker tool. However, compounding is as much a mindset as it is a mechanic to understand. And now it's not just Albert Einstein. Warren Buffett himself stated that my wealth has come from a combination of living in America, some lucky genes, and compound interest. While Benjamin Franklin stated that money makes money, and the money that money makes money. So with that contextual understanding and the knowledge that compounding can make a big difference, let's try to understand what compounding is and discuss some examples of how it could actually look in real life. So compounding. To understand compound interest, it makes sense for us to delineate this between conventional simple interest. Simple interest is done traditionally with a straight line, it's done linearly, and you take out the gains and do not reinvest them. So to understand simple interest, to use a straightforward example, if you've got $10,000 as your principal, you've got $10,000 that you're earning 10% interest a year on over a 3-year period. Of course, if you're getting 10% a year on $10,000, simple interest, straight line, you get $1,000 each year, $3,000 total, and you'd have $13,000 at the end of the 3-year period. However, compounding interest is interest where you're reinvesting the returns that you have and having those interest returns compounded. So for compounding interest, that same $10,000 principal, 10% a year over 3 years, but you're reinvesting them. Instead of the $13,000 gained, you'd actually have $13,310. For the first year, you get that $1,000, 10% of $10,000 is $1,000. But in the second year, instead of 10% of $10,000, you'd have 10% of $11,000, as that initial $1,000 would be reinvested, which gives you $12,100. You then get 10% on that as well. And you can see how this starts to pick up pace. Compounding picks up exponentially over time, with the greatest gains being delivered over the longer, later periods of the time. And it's worth noting that a lot of people use the example of compounding and liken it to a snowball that picks up pace. The further down it goes, the more that it picks up momentum, and compounding starts to pick up pace rapidly. I guess when we're thinking about compounding, the best real-world example that we have of compounding, and really a real-life case study of compounding, is Warren Buffett. Here's a life case study of it. He discovered it very early. If you're understanding and interested in Warren Buffett's origin story, there's a fantastic book called Snowball. Pretty fitting title with everything that we're discussing. It was a great book. I read it, would recommend it, so you can dive into that later on. But for a bit of a contextual understanding, Warren Buffett started at 10 years of age. He's been generating well over a 20% return annually, which is fantastic. But Warren Buffett's secret and success has come from the long period of time that he's been investing, and of course, the resulting compounding effect that he's seen. To get a bit of an idea about the scale of Warren Buffett's investments, he now has over $100 billion to his name, close to $120 billion. However, what's fascinating about this is Warren Buffett has close to $120 billion, but 99% of Warren Buffett's wealth was actually earned after his 50th birthday. Not 50%, not 60%, 99% of his wealth. And to go one step further than that, over 90% of Warren Buffett's wealth, which ended up being around $100 billion worth of his wealth, has been earned after his 65th birthday. That speaks to the nature of compounding and the real hockey sticking that you start to see as it scales exponentially over time. And now I understand, of course, billions of dollars, these are large, lofty numbers. They can often be difficult for us to conceptualize as retail investors. But there is quite a fitting story that I think will help you visualize the effect of compounding over time. Now, this is called the Chessboard Story. Its origins are not confirmed, and depending on who's telling the story, they have a little bit of a different backdrop to it. But I guess the nuts and the bolts of it is that there was a king who wanted to reward the recipient and said, "You can ask for anything." And the recipient simply says, "All I want is a chessboard." A chessboard has 64 squares. On the first square, you put 1 grain. Some people say it was rice or wheat. Then on the second square, double it. So put a second square of grain. And then on the third square, you put 4 grains, then 8 grains, 16, 32, so on and so forth, until you get to the 64th square. And all he wants is the amount of grain that's on this chessboard. Now, it's quite a fascinating story. I wonder what you think. 64 squares, you start with just 1 grain of wheat, and then you double it each time to 64. How many pieces of grain do you think he ends up having? This is quite a fascinating test because it speaks to the difficulty that we as humans often have conceptualizing large numbers and the difficulty that we have to visualize exponential growth over time. Take a second, have a think about how many pieces of grain that you'd think he'd have. 1, 2, 4, 16, 32, 64, so on, so forth. How many do you think he'd end up with? The answer might surprise you. It actually ends up being 18 quintillion pieces of grain. Now, to help give you a bit of a reference for that, 18 quintillion pieces of grain is over 2,000 times the annual production of wheat. And reportedly, this 18 quintillion grains of rice, if you were thinking about it in terms of rice, would equal 210 billion tons. And so ultimately, what have we learnt? I think there are a few interesting learnings along the way. Firstly, good things take time. I know that the world that we live in is often impatient. We're seeking instant gratification. We want to find the next hot thing. What's that one thing that's going to be able to help us just finally reach our goals? But good things take time. It takes patience, discipline, and of course, consistency and commitment to a goal over long periods of time. I think a second learning as well is when in doubt, zoom out. Now, we think about this often in terms of charts, and we discuss this, that of course people get caught up in the day-to-day. Is the stock up today? Is it down today? Is the market green? Is it red? What's happening? Sometimes we have to look at longer time frames if we're thinking about things from a longer term time horizon. But the same should be said as well when we're thinking about our goals. When in doubt, we shouldn't just be thinking about how has one stock done or how has one investment idea come up, but we should be thinking about it as part of our broader portfolio or as part of our broader investing goals. So thinking about it not only on a time horizon, but in terms of the scale and how it fits within our total portfolio composition. And then thirdly, I think it's important that we set our goals. Often we get caught and spend a lot of time doing the analysis or the modeling or looking at ratios and trying to work out, is this a great investment? And now this is a very critical component of investing, but it should be thought about as part of our broader investing strategy. And we should have these goals. Maybe spend some time in the compounding calculator. Work out to achieve your goals over long periods of time. Do you need a 3%, 5%, 7%? 10%, 12% return. And so we should be thinking about our goals. What's the best way to get towards our goals? And how are we actually going to get there? I think often we can get caught in the day-to-day, the granular, get caught in the weeds. And of course, the actual analysis, the research, this is a critical component of it, but it is just one component. So not only when in doubt, zoom out, but have goals, set them, write them down. And make sure you stick towards this North Star. You don't get caught up just looking in the day-to-day. I know that it can be a struggle to conceptualize exponential growth. We've talked about it with the chessboard example, but it is as much about consistency as it is about stock picking. Develop systems to help you to achieve your goals. Of course, you're not just searching for lottery tickets or exciting one-trick ponies. What you're searching for is the opportunity to enable yourself to achieve the returns that you're seeking. It's going to be different on a person-by-person basis over the long run in a sustainable process. It is a fascinating discussion. There's so many components to it. Drop in a comment below. Let us know your thoughts on it all. And if you're enjoying the Mindset Monday series, let us know too. It's a new series. Here's the last video we did in that, so you can check it out. A big thank you for joining us. For now, stay well and happy investing.